The January 2015 template is a template that implements some of the ideas that Larry Williams presented at the Las Vegas Traders Expo in November of 2014. And that was his free presentation, which I attended, and I'm going to go through some of the things he was talking about, and we'll look at why this template came about and what the template can do for you, and also how you can test some of the ideas by using the trade simulation part of EdgeRater. So you can see that in the What's New for January 2015, you can see that we have a new category called Hot Topics, and the first hot topic in the category is the Larry Williams range scans. So that's if you click on New this month and go to January. And then if you want to actually go to that category, you go over to the right hand side, select the Hot Topics category, and then select the range scans template. And you can see the template has come up here. Now to run this template, the same as any other template, it's a scanning template. So you select a symbol list, make sure your list has been updated to the latest end of day or intraday data, and then you just press run. I'm using the weekly options list, which is the list of stocks that have weekly options associated with them, and that list is in everybody's program, so everybody should be able to do exactly what I've done here, although the date that you're running will probably be different to the date that I'm running. So anyway, the template is finished running, and when a template runs, it produces a report. This is the report. So what you can see here is the columns F through M are the various ranges that Larry was talking about. Now, to get an idea of the actual presentation, I've also written a blog post. If you go to the template info button up here, click on that, that will bring you to the blog post. And this is talking about all of the testable ideas from the presentation. A little bit about who Larry Williams is and what he was saying in the presentation, which was breaking the market down into a simple structure of basically 4 different types of days. There's a down range day, an up range day, an inside range day, and an outside range day. And you can further apply information to each of those ranges and say whether the close was up or down, as opposed to compared to yesterday's close or prior day close. So it actually gives us a total of 8 possible patterns. So pattern 1, you can see here, is a down range day, meaning that the high of the bar is lower than the high of the previous bar, and the low of the bar is lower than the low of the previous bar, and the close is lower than the previous close. So this is a down range down day. Number 2, this would be a down range because your high is lower than previous high, low is lower than previous low, but the close is higher than the previous close. So this would be a down range up day. And if you look through this list, you then characterize them into up range down days, up range up days, inside range down days, inside range up days, and outside range down days and outside range up days. And using these 8 patterns, Larry suggested that you can create some powerful strategies. So the strategy that was presented was a simple strategy where the entry was a simple entry based on the close of the market whenever that pattern occurred. And the exit was 2 exits. There was a stop loss based on a dollar stop, and then there was an exit based on the first profitable opening. And here are some of the stats that were presented. So what I wanted to do with this scanning template was, first of all, be able to find each of those types of range days. So you can see by running the template, I can now see I've got down range down days, that's DD, down range up days, that's DU, up range down days, up range up days, inside range down days, inside range up days, and outside range down days, outside range up days. And the way that the template works is whenever that particular range type has been detected, a yes will be placed into the respective column for the stock row. So in this case, you can see that the DIA, diamonds, had a downrange down day on the last day that I have data for. And I can always see what that is by double clicking on the cell, and that will bring up my chart over here. And if I pin that to the top, we can then take a look at the chart, we're looking at the diamonds here, and you can see that the last bar was a downrange bar and it was a down day. Now these cells have also been linked to particular chart layouts. So at the bottom of the screen, I'll explain TR% in a minute, but the lowest area of the screen is the actual scan for this particular type of range bar. So whenever there is a 1 value in this in the lowest area, then we're looking at that's a downrange, down close day. And if I move the cursor over to the various other columns, then the scan at the bottom of the screen is changing. So now if I click on, I'm on uprange down day, you see it's changed to uprange down close at the bottom here. So now I'm picking out all of the uprange down close days. And if we look at the yes over here, that's an outside range down day. The very last bar is an outside range. The high is higher than the high of the previous bar, the low is lower than the low of the previous bar, and the close was down from yesterday's close, so that was an outside range down day. And then this bottom area of the chart has changed to show me all outside range down days. Now if you were interested in seeing all of the ranges on one screen at one time, then this template comes with the extra chart layout, which you'll find underneath the category called Hot Topics, called LW All Range Types. If I click on that, what I'm going to see is every one of those 8 range types in the lower area. So I can quickly, if I'm interested in how often a particular type of range occurs, then this is a very quick way of getting a visual on that. And just verifying that the scan is picking up the right types of thing. But if we're not interested in seeing them all at one time, we just see one at a time, and we can just click on the individual cell in the template. Now I should explain what some of the other columns mean. Over here we have indicators that are going to be useful for doing testing and running this template to understand what they mean. So first we have ATR, that's your average true range. That's a 14-day ATR. That is a very common indicator, so you can look up on Google about ATR. Then there's true range next to it, and whereas ATR is your average true range is just the true range of today. So the next column is TR%, and that's saying how much is today's true range compared to the average true range over 14 days. So this will give you an idea of whether today's true range is lower or higher than the average, and by how much. And if you wanted to sort by these columns, then you can find that the top stock in this list, so I've just sort of clicked on that column, has come to the top with 289% higher than the average true range Microsoft. And what kind of a day was it? Well, these next columns will tell you, because C1 is the close 1 bar ago, close over here is the close of today, and so the C% column tells you what percentage today's close is of yesterday's close, which is down 9%. So Microsoft had a big down day, and if we click on Microsoft and look at the chart, and we can see this was definitely a big down day. That would be a downrange down day, massive TR%, much higher than the average. So the true range was much higher than the average true range in this stock. So you can do all kinds of things like that to quickly find the range types that you're interested in after we talk a little bit about testing some of these range types, and bring in to the top of the list things that might be of more interest. So another thing you can do, if you're interested only in downrange down days, and you'll see a reason why you might only be interested in downrange down days a little bit later, but if you were, you could click on the little arrow here and just say only show me downrange down days. So all of the stocks now in this list are downrange down days. No other types of ranges are included in there. And then I could do something like sort by how much of a percent the range is outside of its average true range, and then go down through this list, and this gives us the biggest movers in a down direction. And as you'll see in the testing, these stocks tend to have the best performance when the trading strategy that I mentioned before is applied. and we'll see that. But it's a little counterintuitive perhaps, because obviously when most people see a downrange down day, and this was a message that Larry was talking about, then people get scared and they would potentially dump their positions. But he also mentioned that that might be the best opportunity to actually pick up some shares and for a short-term trade. And he gave us some stats on that, which you'll find some of those stats on the blog post. But we'll also be doing our own testing here in just a sec. So let me get into that side of it, the testing side. So along with the template, there are some new chart scripts. And if we go to Chart Designer, and let me just click on all range types, but you can click on any chart type you like. And if you go over to chart scripts and look under system scans and scroll down until you find the LW underscores, you'll see we have scripts for, these are the scripts that have been listed down here, which you could drag over onto the chart, which created these. But these are also going to be useful for doing testing within the entries and exits tab. I should explain a little bit about what the parameters are to these scripts. You can see that there is a 14 and a 1. The 14 is your average true range number of days for the average true range, and the default standard that is used in technical analysis is 14, but you can change that within these parameters if you like. And -1 is a threshold level beyond which the event will fire. So and it's a true range threshold level. So where I was talking about TR% being how far today's range is compared to the average true range, what percentage of the average true range is today's range, then you can set this threshold in there to only trigger if it's beyond a certain amount. And a -1 means basically minus 100%, which is basically saying the threshold is not set at all, and so every single downrange down day will be triggered here regardless of the TR% value. I hope that makes sense. So if you want to test some of these things, you can come over to Entries and Exits tab. And Larry's test when he was doing the presentation was that he'd run tests from 2002, I think it was, through to present day using the E-mini S&P. So I wanted to find a proxy for that. So I've got my list of weekly options here. And rather than running a test on all of these stocks, which you could do, I'm just going to find SPY, which is a proxy for the E-mini S&Ps. So I'll click on SPY here. That's the only thing that's checked on the left-hand side. I will come down to, I'll find my LW underscore scripts, and you can use any of these scripts to do any testing you like. And I'm going to click on downrange, down close, or double click, or drag it over. Two options to get it into the area, but I will double click it. So downrange, down close days, -1, no threshold for the size of range. And I will just run that. And we've got now a list of all entry signals going back to, I think the first day is somewhere around 2005, because I have 10 years worth of data in this symbol list. And you can change the amount of data you have in your list. The amount of data that you want to download for a particular list is easy to change if you need to do that. So now I've got the entry signals. What I can do is go over to the Trade Simulation tab and say, well, for each of those downrange down days, what I want to do is create a sort of a trading system and test a trading system around that. So what I'll do is I'll say I would like to go long whenever any of those events occur. I would like to go long on the close of that bar. I'm going to hold it for a fixed number of days. I'm going to choose 100 in here, but that really, the reason for that is I know that each of these trades is going to be exited before it gets to 100 days of hold period, because the settings I'm going to set for the stops, and they are going to be, I'm going to set a fixed dollar loss, and for example here I'm going to choose $500, and I'm also going to take a profit stop, which is exit on the first profitable open. And I'm going to say allow duplicate trades. You can turn that on or off, and I'm going to say $10,000 per trade, initial equity $100,000. Okay, so having all of those settings in there, and you can choose whatever settings you want to put in there, you can just press the run button. It will take all of those entry signals, create the trade simulation, and then present the final trade list, which is essentially the list of all the trades that were made with various statistics for each trade. Number of shares traded, the dates of the entry, dates of the exit, the profit and loss percents, the profit and loss actual dollar amount, the maximum favorable excursion in both percentage and in dollar amount, and the maximum adverse excursion experienced in the life of that trade, also in both dollar amount and in percentage. And then the reason for exit, which most cases here is the first profitable open stop is hit. This case down here, line number 5, the trade that was on March the 8th, 2005, was a 28-day trade, but it was exited because there was it hit the stop loss value of minus $500, but it couldn't get out exactly at minus $500, and it managed to get out at minus 501. So that's a stop loss exit. You can scroll through the list. Most of these trades are winning trades. Once you've seen the trade list, of course, you can look at the trade summary. It rolls all of those numbers up, and it shows you some statistics, like there were 677 total trades with 640 winners and 37 losers. Bearing in mind, each of those losing trades is going to be around $500, because that's the only way that the losing trade is exited is with the dollar stop loss in this particular scenario. But we have an average profit per trade of $25. Okay, the percentage of winners are 94.53%. Now, I'm not suggesting that these are the numbers that you should use, but it's just an interesting way of looking at this strategy and using EdgeRater to figure out whether the strategy seems interesting to you or whether you can improve on the strategy. And you can test all these different range types and test them with different types of parameters, different stop loss amounts, and maybe choose different exit types as well. I'm just showing you one way of doing it with the scripts that are now with this template for January 2015, which is all about range scans. So once you've seen the stats, you can take a look at the daily equity chart. Just click on the left over here, daily equity, and you can see the equity lower left upper right looks quite nice. Still some drawdown periods, which Larry was mentioning. They do exist, and every trader has to be aware of what there are drawdown periods in every strategy that you'll come across. And then we can look at the Pnl distribution. Now, this is an interesting chart because it shows us that most of the trades were in the 0 to 1% category, gainers. But then over on the very left-hand side, we have minus 5%, which is the number of trades essentially that lost the $500. And so there are none between on the losing side between 0 and 5%, because, as I said before, the only way this strategy exited is on a $500 loss. And the area at the bottom of this chart shows each of the trades, the individual trades. So the tall red bar is your $500 loss. The green bars are all winning trades, and then the wicks on these candles indicate your adverse excursion. So while you were in the trade, if the trade ever went against you, you can see how much it went against you, which is a very interesting way to look at this, because just by putting the cursor over here and drawing a fictitious horizontal line, cutting off these wicks, you can see what a potential stop loss, a good stop loss level might be. Because if I move it up here, you can see it cuts through quite a few of those wicks, and they would have then these winning trades would have been losing trades if the stop loss had been at that level. So you can see all of that on this list. In this period of time, there were a lot of losing trades. 2008, and so lots of information you can see there. What you can also do is you can double click on any of these bars down here, and that has brought up a chart for me. And the chart now is showing me the exact entry and exit. So I clicked on this bar over here, and so this is a winning trade, but it was a losing trade at some point. And you can see what happened here. The entry was on the close of this bar, downrange, down day. The trade went against for some time, then came back in favor, and then the first profitable open was over here, and it's saying the exit reason for that was first profitable open stop. Turned out to be quite a good trade, but it wasn't good for the whole period of time. Let's take a look at one of the losing trades over here. The entry, downrange, down day, and then the trade basically went against for a long time until eventually the stop loss was hit, and the exit reason is indicated on here as stop loss. Now, if you want to see those in a better order, you can just look at the trade list and then sort by exit reason. So now I'm looking at all of the stop losses. I can go through, quickly scroll through this list, and I can find out all of the trades that were losing trades in this case. It's useful to be able to quickly flick through those. And if I wanted to see all of the trades that were profitable trades, and I wanted to sort them by profit and loss percent, the most winning trade was this trade right here, which was essentially a downrange down day, and then the following day was a profitable open, and that happened to be the biggest percent gainer at 6%, or $602 on that one trade. And if I scroll down through this list, we'll find all of the profitable trades. That was another good one there, and of course these all look much better than the previous trades I was showing you, because these are all the winningest trades. But that's just quickly how you can then test these strategies that Larry Williams presented at the Las Vegas Traders Expo in November 2014. I was there. It was a free seminar, one of his free sessions, and he had lots of good information about the statistics of these strategies via his testing, which I've included some of those statistic numbers in my blog post. But then if you want to go ahead and you can run any of these strategies on any stock within EdgeRater, you can go ahead and do that. And if you find a strategy that you end up wanting to trade, and then you want to find the stocks that are the best candidates, you would go back to the template, run the template, and get your list of range bars. If you decided that what you really wanted to do was trade downrange down days with the maximum trading range percent values, then you would sort it as I've sorted here by down, or filter by downrange down days, and then sort it by trading range percent or true range percent, and then these would be the top candidates. Now, of course, these are all going to look terrible when looking at the chart, because of course these are all downrange down days with the biggest true range, so they're all not going to look they're going to look a little bit scary. But potentially these have with this strategy, it seems, and you apply these trading rules, these have a fairly good percentage of coming and being winning trades. Now, what you would do in your own time, after you've taken a look at this video, you would then go and you probably want to mess around with taking out the downrange down close selector and just choosing a different selector, maybe downrange up close, see what the difference is in those results. You may want to change the threshold level from -1 to be, you might want to choose 1.5, which means 150%, that the true range is 150% of the average true range. So in that case, it's only going to take the downrange down days that have a massive true range compared to the average true range. So all kinds of testing that you can do now with this new template. There are 8 scripts in here, as I mentioned before, and they're all parameterized, so you can use those parameters for number of bars for the average true range and the threshold level. So that's it for this template. Very easy to use the template if you're trying to find stocks that have any of these range types, and of course the scripts are all included now, so that you can go and do your own testing to see if you like any of the strategies that were presented. So that's it. Thanks for watching.